Well, hey, everybody, Jeff Sutherland and Chase Waldron from eXp Realty, ready to give you a March market update. It's a great day to be alive, isn't it, Chase?
Heck yeah, brother. It's been a great start to the year, man. It's going to be a good day today. Let's
Yes,
get
sir.
after
And my U of A Wildcats are going to the Final Four in Indianapolis this weekend.
it. Representing.
All right, here we go, my friends. This is one of our most popular things we put out. Today, I'm going to be getting you a lot. Chase and I are going to be giving you a lot of good information. So let's check it out right now. Okay, let's start it out with short-term rentals, Airbnbs, things like that. Did you know the House of Arizona actually passed House Bill 2429, which establishes maximum occupancy for stays at vacation or short-term rentals? They also are extending the violation window where people can be fined when they're residents that come in and stay there, basically do things that violate ordinances in the area. There's also higher insurance and liability that needs to be held by the owner of the home. It also makes sure that you reside in the home if you have an auxiliary dwelling unit outside of the house. So they're putting more restrictions on short-term rentals. It used to be a very friendly Airbnb state. It's becoming a little less friendly because there's been so many complaints from people in the neighborhood about these people that come into these Airbnbs, Chase. It's pretty crazy. Things are changing in that area too.
And is that mainly each municipality is a little bit different on the rules and regulations that they have? Is that correct on short-term rentals? So anyone out there that's looking to get a short-term rental, you really need to dive deep on the area that you're going to be in to get the specifics. Is that correct?
100%. Yep. Each municipality is a little bit different, but these are the things that can be enforced in local municipalities across Arizona. It's pretty interesting. Now, we're in the late part of March 2026. This data was pulled on March 6th. Says our mortgage rates were about 6.14. I know you stay up on the data, Chase. What's it sitting at right now?
Yeah, so this morning when I checked, it was up to about 6.47, which is actually down a little bit from a couple days ago. It was up over 6.6. So it's been creeping back up again. Everybody was excited. It hit 5.99 for a half of a second, and then it's jumped right back up. So we watch it every single day, but there has been some increases as of recent.
Yeah, in fact, my wife is an executive of a local title company here in Arizona, and I can always tell when the rates go down because I know lenders and, of course, title people, and the mortgage applications flood in. People want to refi, things like that, and that was a short blip, and then they went up. The rates went up, and you can expect this. You can expect a lot of up and down. This could last for quite a while. That's why it's literally impossible to time the bottom of a market. So right now, you got to focus on the deals where they're at. And the deals are in new homes. Okay. The deals are in new homes. And I would argue certain municipalities in the valley are more affordable than others. Chase, you're out there every day, getting deals done with interest rates that these builders are offering that are just ridiculous.
Yeah, it's crazy. We were literally there last week at a community, and this builder was buying the interest rates down to a 3.75 30-year fix. So when you compare that to a 6.5, where we were just at, really today and a couple days ago, I mean, that's almost cutting it in half, right? So it really plays a big role in your monthly payment. For a brand new home with the warranties and a number of other things, it's really huge, especially just for buyers to have that option, right? To be able to get into a home with an interest rate like that. I mean, you hear everybody talk about those 2020 interest rates, and that's pretty much where these are getting to with some of these builders. So it's really pretty cool.
Yeah, and I can guarantee you there's probably not a good chance that I'll see those kind of rates again in my lifetime. That was a once in a lifetime event, I believe. But I will tell you this too, if you're a buyer looking for resale, there's deals out there right now too, because sellers now are starting to finally realize it's not 2020, it's not 21 anymore, it's 26. Things are a lot different. We've got 50% of sellers offering concessions at an average of $10,000 per transaction around the valley. So things are changing. You'll see this going up and down as time goes on here. Now, this is an interesting statistic. What this says is if you're a married couple and you have a family, if you're basing your payment on a median sales price in the valley, that's Maricopa County and Pinal, and let's say that that median sales price is 450, 460, that's about what it is. You're kicking in $400 for taxes and insurance per month. You're putting a 30-year mortgage on the table and putting 10% down. Your payment every month is $29.96. That's principal, interest, taxes, and insurance. $29.96. According to this chart, that's affordable. Okay, that's affordable, and that's the new affordability metric. And you can see the different affordable payment levels for different units, married couple families versus all households, non-family households. So it's very interesting. Now we're actually getting to the point where it's becoming affordable, but is like I've always said, the income has to continue to increase. The wages have to continue to increase to catch up with what happened to housing. We had $7 trillion put into the federal treasury. That causes inflation, and that's what happens. So it takes a while for wages to catch up, but they are catching up, and there are affordable homes in Phoenix, believe it or not. Okay, let's talk inflation. Let's talk inflation. We're sitting at 2.4. That's been fairly flat. Don't be surprised if that goes up again. Look what's happening with oil and gas prices and the uncertainty in the geopolitical market. Investors become very wary, and that does sometimes create more inflation. So I don't know what's going to happen. It's sitting at 2.4, but that was back in 2020, or that was back in January 2026. And I don't know what the reading says now, but I think it is trending up. So we have to take a big, hard look at that, at inflation, and make sure that, and hopefully that won't go up much, much more than what it's at. Okay, so this is interesting. Gas prices, right? Gas prices in Phoenix actually usually pretty high, and they're higher than Tucson. I'll tell you that because I was just in Tucson this past weekend. And Chase, why are prices higher in Phoenix with gas than in Tucson?
Yeah, it's pretty interesting. So we were doing some research on this, and come to find out, Phoenix has different requirements and requires a cleaner blend of gasoline, and not all refineries can produce that. So places like Tucson that do not have these requirements can get their gasoline from refineries in El Paso and a couple of different areas, while places in Phoenix that have these requirements have to get them from a number of different places, but also including California. California is the second biggest producer or provider for the gasoline that we get here in Phoenix. So you can see there why the gasoline prices would be higher here than somewhere like Tucson. So that's something we just recently found out, which is pretty interesting.
Yeah, in Phoenix, people are driving all over the place, especially us as real estate agents. So the gas prices, yeah, they hit us hard, right? How much does it cost to fill up your truck, Chase?
Yeah, it was bad. It was like 89, $90 just yesterday, and that was at Costco. So it's been pleasant.
Yeah, there you go. There you go. And on top of that, we're seeing the stock market correct a bit. Well, it does make sense. We have the war in Iran. We have the geopolitical uncertainty. Investors get very shaken by that. We have gas and oil prices, which have skyrocketed. Well, you know how critical oil is with the economy. It's a very, very big deal. So now you're seeing some drawback with the stock market, which is not uncommon, by the way. This isn't a crash, it's a correction. By the way, in the last 5 years, we've gone up 44% in the stock market. Are you kidding me? So if we're correcting, that makes sense to me. And I wouldn't be surprised if we correct more. I don't see a crash. I'm not an economist, but it does make sense. All the uncertainty in the market, it has an impact on the stock market. Now, let's look at the listings under contract. This is pretty par for the course. Every year, we have a lot of listings that come online in the first quarter, second quarter, and then we slowly go down. And you can see everything that's under contract. It literally goes down from like May all the way through the summer. In the summer, it's somewhat flat, and then it just takes a little bit of a hit. It goes up. It goes up a little bit in October, November, and then it just like drops to the bottom, and we start the whole thing over in January. It's very, very predictable here in Arizona.
Yep, you could see it in all the previous years. Nobody really likes to move when it's 120 here in Phoenix, so it makes sense. And
No,
we see it definitely slow up.
yeah. And why does everybody ask us to help them move like in June and July? It always happens that way.
Yeah, yeah. Hey, can I borrow your truck?
That's right. That's right. So we follow a Cromford Market Index. It's a secret sauce that we purchase, and these data analysts are superb. Right now, we show that we're in a buyer's market. We've been in a buyer's market, and literally, there's only been about four significant buyer markets in the last 25 years. And so people are getting deals right now because they believe in housing and they know that it will stabilize. And right now, people are buying homes. Now, not as much as we've had in the past, but we're still buying and transacting about 5,500 homes a month. in the greater Phoenix area, which is quite a bit. But right now, don't make a mistake and sit on the sidelines because it actually is right now a buyer's market in Phoenix. And you can see over the last, since 2021, 25 years, we've had the big buyer's market that happened during the crash, the big Great Recession, the housing absolute catastrophe in 2005, 6, 7, right? And then we had a buyer's market again in 2010. Then we had a couple blips, one in 14, one in 22. But this is arguably the second biggest buyer's market in the last 25 years. And people are sitting back and waiting and hoping things will get even better. It may not. It may not because we're starting to see balance in the market, balance to a buyer's market overall around the valley, which we'll show you here in a minute. Now look at the new listings. They skyrocket in the first like 8 weeks, first 5, 6 weeks. And then in 2026, interestingly, we're not seeing as many new listings. I have a theory behind that. I believe it's because these sellers realize the supply is actually it keeps on growing. You're probably like, what is that? That doesn't make sense, Jeff. The new listings are going down, but supply is growing. The reason supply is growing is because our days on market are growing. Sellers have their properties out there on the market longer because they're refusing to go down in their price. They're refusing to hit reality. They still think they're in 2020 and 21. Let's test the market. Not a good time to test the market. You got to come down to where the market is. So you don't want to be listing your house and sitting out there testing the market, or you could ride the market downward into the summer. Would not be good for a seller. What do you think, Chase?
Yeah, I mean, so you said it, right? The not as many new listings, but the supply continues to grow. Things are sitting on the market longer. We're seeing if you're not priced aggressively in this market, your listing is going to sit. I mean, and we are seeing more price reductions. I'm getting hit up almost daily on homes that I have been in that we have toured that are now having price reductions because they've been sitting on the market for long periods of time. So it makes sense, right? With the supply or not as many new listings, but that supply continues to grow, and that's why, because they're sitting there.
That's right. And if you were fortunate enough to buy a house before 2020, lucky you. You're the fortunate one, right? Take your equity and smile and move on, right? Don't get greedy if you're a seller because that greed will literally cause you tens of thousands of dollars because this market could go down a little bit more in the summer. It's a very good possibility. We're not crashing. It's just little corrections, in the market because remember, the reason we crashed in 2006 was not necessarily a real estate problem. It was a lending issue. We were lending to people that had no jobs. It wasn't a good thing. So we had a lot of stuff going on in the economic markets that caused that, not necessarily the actual property values themselves. Okay, so now if you look at the Cromford Market Index, you can see the seller's markets on the left, buyer's markets on the right, balanced markets straight down the middle. And if you notice, what do you see about the buyer's markets? That's kind of a commonality. It's usually stuff on the periphery, right? On the periphery. And typically what happens is the buyer's markets are the first into a buyer's markets and the last out, right? So it takes a while for the seller's markets to start to absorb. What happens is the buyers or the actual buyers in the buyer's markets come in, right? And they come into the seller's markets. And that's why those seller's markets become seller's markets because they have more demand. People start moving a little closer, but you can pretty much you can take it to the bank. When you go to these periphery places, you're going to get better deals, right? Chase is doing deals all the
That's
time on the periphery.
Yeah, that's the thing, right? If a buyer's willing to go out there a little bit further, right, their dollar is going to go a little bit further. They might be able to get a better opportunity, and that's where the majority, not all, but the majority of the new build communities are at, right? Are in these outskirt areas, right? So if a buyer is okay with being a little bit on the outskirts of town, that's where a lot of these opportunities are at.
Now, if you look at the monthly median sales price, this is for the greater Phoenix area, Maricopa County, and Pinal. You are going to see that we had the big run up in 2022, April, and then we had a big time correction, a whole 8% reduction. Actually, if you take it from the peak, it was more than an 8% reduction down into February 2023. And then you had about a 7.5% increase in price. It started to go up. And for all practical purposes, over the last 2 years, we've been pretty flat. We've been pretty flat. So, and there's a chance that prices might go down a little bit more this summer. So there you go. There's your trend line. But I would not expect prices to go down that much because of all the new money that was printed, and we don't have anything that's fundamentally wrong with the real estate industry. We have an affordability challenge. That's the biggest challenge. We need wages to catch up, and that's the biggest thing that I see as a guy that's been doing this for quite a long time. Okay. And that was my dog, if you heard it. Okay. So now we have February only sales. Look at this. If you look at last year's February only sales, it's 2025, literally the same. We're 1% lower with the amount of sales that happened in February. Talk about very, very similar data from last year. Now, this is really interesting. Look at how many homes we sold in February of this year, 5,438 versus back in 14, 15, and 16. This should blow your mind. This is why real estate is lethargic right now, and we should be selling many more, thousands more homes, because look what happened to the population and all the homes that were built between 2014, 15, and 16. And now that's 10 years ago, and we're selling the same amount of property per month as 10 years ago. That's crazy. Okay, now take a look at this, guys. The index, you can see that supply is rising, okay? And it's going up and down. It's going up and down, but it is generally rising. And we have demand that's balanced, or actually lethargic. So you got lethargic demand, you got supply that is essentially rising. This one here is a little bit dated, so you can't see the actual last few weeks, but you can see this is February 1st, okay? It's not catching the latest trend line, which the supply is actually going up. So the supply is going up, and then that's causing a big just glut of inventory and prices. This is why we're getting some downward pressure on prices. Buyers are in more control. Either a
Yep.
city's in balance or it's in a buyer's market.
Yep. The buyer has a lot more options out there as that supply continues to rise.
Yep, that's right. That's right. So this is why when we take buyers out, we get aggressive, don't we, Chase?
That's a fact. That's a fact.
You don't get unless you ask. So we asked for some pretty aggressive asks, and sometimes they actually are well received. Look
Yeah,
at
no
all
doubt.
the
Right now, we're basically. I mean, any of these offers, most of the time, especially. I mean, if it's priced, right, then that's one thing. But a lot of these homes that are sitting on the market, they're still priced high. So a lot of times, we're having to go in there and basically ask for a write down on the price, and then obviously, concessions to cover closing costs for the buyer, maybe even a write down, or a rate buy down, and then obviously covering our fee, and that's all in that initial offer. So there's a lot of negotiations that are happening on the buyer side, which is a good thing.
Yeah, and check out how many price reductions are happening per week. 3,200? Like, that's a lot of price reductions, Chase, and they're happening all over the place, right?
Yep, yep. We're getting hit up almost every day by homes that we've looked at that are
Yep.
having reductions in price.
I don't know how far the market will go down. I don't know if it's going to be more over the summer or not. All I can tell you is there's a lot of downward pressure on sellers right now. And so if you were lucky enough to sell your home in the last couple of months, then awesome. That's awesome. In the summer, it could slow down. We could see some further reductions in price, and that median sales price might be going down a little bit, which certainly wouldn't hurt my feelings. I would personally love to see that for the greater Phoenix Valley. So,
Right. And for the sellers, because we've been talking a lot about buyers, I mean, that's why it's so important to price your home aggressively if you're able to, right? If your goal is to sell the home, which as a seller, that is the goal, you should really review the pricing, what's going on in that neighborhood, and you have to, be beating out the competition in either quality or price, preferably both. So it's something that really, if the goal, obviously it depends on timeline, but really diving into that and making sure you're priced where you need to be.
that's right. And some of you that are considering buying might be sitting on the sidelines going, well, look, Jeff's just telling me that the median sales price is trickling down a little bit, and I need to stay on the sidelines because it should go down more. That's true. However, I will tell you this, all it takes is one event. I've seen this happen several times over the last 25 years. One event, let's say the rates go down dramatically because of some treasury note thing that happened, because the mortgage rates are tied in with the 10-year treasury bond, right? So we could see big changes very quickly. And if we do see an interest rate drop at any point, what's going to happen? The prices won't go down. I can tell you that right now. So right now we're in a buyer's market. Okay. So it really comes down to terms. You go out there and you look for a home and you help us negotiate terms for you, terms that are very favorable for you, the buyer. Hopefully that makes sense because you can't time the bottom of a market. Right now we're in a bona fide buyer's market. So go out there and take advantage of it and try to get good terms and keep on making offers until these sellers actually you run across a seller that actually says, okay, let's negotiate.
Yeah. And if a new build is an option for a buyer, another concern, if those interest rates do trickle back down to where it brings more people into the market, that drives demand up, that drives prices up. Another concern is that these new build communities might not have to be buying these rates down as much, right? So even if the rates go down, the likelihood of them going down to that 3.75 is fairly slim, right? So right now, those opportunities are there and they might not be there if those rates start trickling down. We might not see that for very much longer. So, I mean, time will tell.
What a good point, right? When you see the interest rates go up, you see the builders give you even better incentives because when the interest rate is going down, then the homeowner or the home builders don't necessarily have to offer you that discounted rate because it's already a great rate. So, another case for going out there and having us show you a new home because these deals they're giving are just amazing. So, now look at the concessions 50% of sellers conceding money at closing. 50% of listings are making concessions to the buyer. Last couple slides. This is pretty cool. Check this out. This is way back like in the 1930s on Central Avenue near Palm Lane, looking north, looking north. And isn't that something what it looks like? You can see those old cars, those old vintage cars. Now check out how things have changed. Isn't that something?
Yeah, it's crazy.
So, friends, this is Chase and Jeff. We've delivered the goods for you today a little longer, but we really wanted you to understand the market. Reach out to us. We're out there every day showing homes, listing homes. We're in it to win it. Chase was in the upper 1% of sales in our company last year of 2,500 agents. He's an icon agent, which means that he is iconic in the business, which means he works very, very hard for our clients. And so do I. So together we make a great team and we want to do what's best for you and your family. Please reach out to us and we would love to support you. My number 602-370-7174 and Chase's number.
707-685-7214. And I would just say to anyone who's kind of tossing around the idea of getting into the market, whether that's buying or selling, if you're looking for a value of your home, we put together complimentary market analysis, complimentary opinions of value for your home. If you're just curious to see what that looks like. And then if you're a buyer and are curious about any of these things that we talked about today, right? What are some of these other incentives that these new build communities are offering? What are your options if you're looking at resale homes in specific areas? We're here for you, and reach out and we can have a quick conversation just so you know what your options are.
Thanks, everybody. Have a great day.